Welcome to today's market report.
Global equities and US Treasury yields were lower on Wednesday as risk-off sentiment dominated markets, with investors focused on a much-anticipated vote in Congress on raising the US debt ceiling. The US House of Representatives is set to vote on Wednesday on a bipartisan deal that would lift the $31.4 trillion ceiling and allow the government to avert a default. The bill faces a potential tricky path through the House, where Republicans hold a slim majority. It is unclear how many House Democrats will back it. The MSCI's World Index, in which tracks shares in 50 countries, lost 0.82%. Europe's main share index shed 1.07%. On Wall Street, all three main indices closed lower, driven by a sell-off in technology, financial, consumer discretionary, and industrial stocks. The Dow fell 0.41%, the S&P lost 0.61%, and the Nasdaq dropped 0.63%. US Treasury yields moved lower following data showing an unexpected rise in job openings and comments by Federal Reserve officials, including Vice Chair nominee Philip Jefferson, about possibly skipping a rate hike at its next meeting. Benchmark 10-year note yields slipped to 3.6407%. The US dollar, which had earlier risen to a more than 2-month high, retreated after the comments by Fed officials. The dollar index rose 0.16%, with the euro down 0.44% to 1.0686. GBP/USD bulls stay in the driver's seat for the 5th consecutive day, benefiting from the hints that the UK's inflation problems are bigger and can push the Bank of England towards more rate hikes. Bank of England Monetary Policy Committee member Catherine Main said the gap between the headline and the core inflation in the UK is more persistent. The next resistance is 124.50. This is today's market report. Thanks for listening. We'll see you next time.